Hey, what's up, guys? Brandon Wong here, and I have a very special guest with me today, Ted Lanzaro. Today, we're going to be talking about how to get K1s out on time. This has been the bane of our existence as syndicators here, and there are some unique challenges with that. And Ted has done thousands of tax returns, or over 1,000 tax returns for syndicators, and has been in the business for over 30 years. So welcome, Ted.
Brandon, thank you so much. I appreciate you having me on.
Yeah, so for instance, I had a deal recently that we got the K1s out like almost 2 months late. So what are some things that that syndicators can do to prepare and be ready to get them out? Because it creates sort of an investor relations nightmare if they don't come out on time.
Right. Well, and that's the big issue, right? Is that you as an investor relations person want to, do your best to make sure that the K1s are out timely. It's just practical, right? So what we've been seeing with a lot of our syndication clients is like about 5 or 6 key things that are preventing people from getting their K1s out quickly, right? So the first thing is, think about this. Every time, like when you acquired this property, there's a bank account that you start with before you ever even purchase the property. You're starting with a bank account that you're taking in investor money into, right? And you might be paying out some fees, like lending related fees, or you might buy the insurance before you purchase the property. So you gather in all of this money, and then you purchase the property. You actually close on the property. At that point, you transfer over some money to your management company, and the management company starts managing the property and keeping track of the accounting. But the accounting for everything that happened before that, management company has no idea. It's not going to be. So when you get to the end of the year, the people will often give me, oh, here's the management company financials, right? And they'll hand me a P&L and a balance sheet. And I look at it and I go, well, wait a second, the building isn't even on the balance sheet. What happened?
Kind of
Right?
important.
Well, they never recorded they never gave the management company that the accounting for that outside bank account. So this happened like probably 10 times this tax season, 10 different new deals, where we had to go and then do the bookkeeping for that outside bank account in order to one, figure out how much capital went into the deal, two, record the building, right? And get all of the fees that were paid. Maybe there was acquisition fees paid out of that account after the fact, right? There may even be distributions. If you closed early enough in the year, there might even be distributions to partners towards the end of the year. So all of that stuff was missing from the management company's financials and had to be added in. So we've developed a solution to that problem this year going forward. For all the new syndications we're taking, we're doing that bookkeeping monthly as we go, or we're setting the syndicator up with a bookkeeper to get that bookkeeping done. That way, by the end of the year, we've given the management company the journal entry to record all of the outside activity, the activity that they don't have, and record the purchase of the property, get the capital straightened out, so that come December 31st, once the management company is done with the December reports, you've got a complete and accurate balance sheet and P&L to start your tax return with. And so that's stuff we're doing before the end of the year, right? And reviewing what the management company is doing before the end of the year. So there's no tax season accounting that needs to be done that holds up the K1s.
Very cool. So step one, build a complete picture, and be proactive with stuff before the tax season comes, because we know everybody gets really busy during that time.
Yeah, correct. And the more we can do before tax season, the more stuff we can do to get the syndicator ready, especially on the new ones, get the syndicator ready in October, November, and December, the better off they're going to be. Because, let's say the management company, let's say they finish the accounting by the 15th to the 20th of January. If in a perfect world, we're ready to go right at that point, right? So now we're getting K1s out in beginning of February, middle of February. That's the goal for all of our syndication clients, would be for them to be completely and totally ready to go before the end of January, so that we're getting the work done for them, in late January, February, worst case, beginning of March, because we do stack up at some point, right?
Right.
The other problem that we've run into that is just as common, by the way, is incomplete investor lists. So a lot of syndicators, everybody's got these, syndication portals that they allow their investors to go into and put their information in, right? Well, a lot of investors, value their privacy, right?
Mm-hmm.
So what do? Well, I'm not going to put my social security number in. Believe it or not, that's really pretty common, right?
Mm-hmm.
So they're like, so we go to review the investor list, and like, oh my God, there's like 5 tax ID number or social security numbers missing from the investor list. You have 50 investors, so now, now it's February 22nd, right? And we're telling you, hey, Brandon, your tax return is done, but we're missing, 5 partners' social security numbers. Well, we had this happen a couple of times this past tax season, where it took the operator like three plus weeks to get those 5 social security numbers, right? So that held up the entire tax return,
right,
from being able to go out. So now, instead of getting those K1s out in late February, we're past March 15th. We're into late March, right? So that's again, and people now what's happening? The phone's ringing. People are like, "Hey, Brandon, where's my K1?" And so and so.
Go ahead. What were you going to say?
Go ahead.
On that, do you need everybody's social security number to distribute any K1s, or just the people that are missing the social security number?
Well, typically we want to have the whole return complete and ready to go before we actually issue it. So in theory, could we have issued people K1s? Yeah, we probably could have, but we often like to. That's typically not the only thing that's holding up the return. But so now think about this. So what we're doing now is to fix that. Is we're reviewing investor lists now in August, right? And we're going back to the syndicator, the operator, and saying, okay, here's what's missing. You've got, investor 10 and investor 12 don't have good addresses. These investors don't have their social security numbers. Go out and get that information now, right? So that the investor list is complete before the end of the year. And then what we're going to do is, once you have the complete investor list, soon as we get our 2022 tax software, which will be probably like October of this year, we're going to start on all the new syndications. We're going to start putting those investor lists into the tax software, right? Because that's the most time-consuming part of the tax prep process, is getting the investor list in, right? And getting, how much capital does each person put in? What is their percentage ownership? All of this information. So all of that stuff, not only will you have a good investor list, but all of the most time-consuming stuff is done before the end of the year. So that's really going to give everybody a head start on getting those tax returns done. Now, the management company's done with your stuff again, in mid-January. we've already got the investor list in. Now we're just we're popping in the P&L, we're putting in the cost segregation study, we're doing the allocations, right?
Right.
That stuff, while it takes time, that's half the return. But we've already got the first half of the return, which is getting those investors
Right.
in. We've already got that half done before the end of the year. So that's how we're creating a system to help syndicators get their returns out faster, their K1s out faster.
Awesome. Yeah. And one of the things that syndicators can do to be a bit more proactive with this is whatever software investor portal they're using, whether it's Cashflow Portal, Syndication Pro, that they're auditing stuff as they come in. Like when someone signs up for your PPM, review the documents, make sure it's complete and that those social security numbers are in there for the people that need them. And that way they're not chasing it down later. They have a complete list from the very start, and then they can get that over to you.
Yeah, and part of it too is letting people know, right? It's part of it is part of the investor education. You're going to have to provide your social security number.
Right.
And what the other thing that's a big issue is single member LLCs, right? So people invest using single member LLCs. There's nothing we can, there's nothing we can do about that. I'm not quite sure why people even bother to do that, since they, as limited partners, they don't have any liability, so they don't really need a limited liability company. But there's companies out there that are telling people they need to do that, and so people do it, right? Well, what the IRS says with limited liability companies, single member limited liability companies, is not only do we want the name and tax ID number of your LLC, but because it's single member, we also need your full name and social security number. So for single member LLCs, it's the name of the LLC, the tax ID number of the LLC, the name of the single member, and the social security number of the single member are all part of the required information that need to be allocated.
Right. That makes a lot of sense, because the IRS is like, that's basically you. That's not a company, that's you. So we need your social security
Yeah,
number.
that's exactly what they're saying. Right, exactly. Yeah, you can put a company in the middle, but we want to know who you are. Yeah.
Exactly. It walks like a duck and talks like a duck. Very cool. No, that's a great advice, I think, for people to get their K1s out on time, So what other considerations to help smooth out the process?
Well, think about this. You've got to give the cost segregation study companies time to do your cost seg studies, right? So if you're buying in January, February, March, April, get them, and you're going to do a cost segregation study, get them on it, right?
Yeah.
Because they do get busy. The closer you get to tax season, the more people are like, oh, we need to get that cost segregation study done, right? And so the cost segregation companies get backed up. So the only time you should ever be waiting on your cost seg firm to get your cost segregation done would be if you're buying the property in like November or December, right? So if you're closing, I had, 3 or 4 deals last year that closed in literally the last 2 weeks of December, right? Well, those you can't really be too proactive with because you're so close to the end of the year, right? And you're going to have to engage the cost segregation company. So the cost segregation company is probably going to prevent you from getting. But again, if you close in late December, we still want to get that outside accounting done as quickly as possible, and we still want to get that investor list done as quickly as complete as quickly as possible. So instead of entering them in October, we're doing the work in January. So as soon as the cost segregation company's done, we're popping in that depreciation schedule and your returns done. So engaging your cost segregation company as soon as possible and getting them rolling on your studies is definitely another proactive move.
And if your intent is to get it done in the first place, I can't think of any reason why you wouldn't want to schedule that like the week after you close, to verify, because a lot of syndicators in their marketing pieces, when they're raising the capital, they're putting like, hey, we're projecting to get this amount of bonus depreciation, or this amount of depreciation on our deal. So there's no reason not to verify that. And, in some cases do it during the due diligence process. Like I've seen people do it at different times in the process, but there's no excuse for waiting to the end of the year to get that done for the cost seg
Right,
stuff.
exactly. Yeah, exactly. And a lot of people are, in fact, getting those preliminary
Mhm.
estimates
Yeah.
during the due diligence process because they're using it as part of their marketing, right? I've seen that a lot.
Yeah. And I've seen also, well, when we presented our last deal to you, one of the things for the people that might be watching this is Ted's actually looked at a lot of cost segregation studies, and he can kind of give you some advice on like, hey, maybe you need to push a little bit harder on this, or they came in a little low. Maybe you're leaving $50,000-$100,000 on the table. So maybe go back and ask them this. So there's huge value in that, and I know that you don't just do the tax returns. You look at the big picture, and you look at the cost segregation study as well. Very, very useful.
Yeah, and that's part of it because a lot of people don't know this. There's actually two types of cost segregation studies. The first one, and the one that typically results in the most beneficial allocation, is when they actually come out to visit the property. The engineer comes out and visits the property and does like a tour, looks at units and all of that. That's typically going to get you the best allocation. The other methodology that some firms use is what they call a desktop study, which means they're just looking at the property like on the computer, maybe
Right.
looking at paperwork that you send them. Those typically result in less aggressive
Yeah.
and more conservative allocations, which cost you money. And typically so think about this. So the reason a lot of people do desktop studies is, frankly, they're cheaper, right? So instead of paying $6,000 for a full-blown engineer to come out and do a full-blown study, they're paying $4,000 for the desktop study, just as an example.
Yeah.
So maybe it's $2,000 or $3,000 cheaper, but if you get $200,000 less of allocation, you actually cost the whole project. You probably cost them, $50,000 or $60,000 in potential tax.
Thanks, guys.
Right? So yeah, you saved a couple $1,000,
Yeah.
but you really cost yourself and the
Yeah.
whole project maybe $50,000-$60,000 in tax benefits.
Right.
So typically, if it's a good sized project, meaning anything over a couple $1,000,000, you want them to come out and look at the property.
Yeah. So moral of the story: don't try to save money in the wrong places.
Right. Exactly correct.
Lots of money. Yeah, that's great insight. So the two different types of cost seg studies are the desktop and the in-person. What was the technical term for that?
I mean, it's a live visit.
Just
I
visit.
don't know.
Okay.
They have a technical
Yes.
term for
So
it.
get the visit.
They come out and look at the property. Yeah.
Okay. And
They're
so,
physically on site.
yeah. Okay, quick question on that, because we know bonus depreciation is sort of phasing out over the next couple of years. What alternatives when that goes away, what alternatives do syndicators have to save money on taxes for their investors?
Well, look, I mean, here's the thing. Think about this. Yes, it's going to phase out. It's at 100% right now. Next year, 2023, it goes to 80%. 80% bonus depreciation is still a lot of depreciation. Okay. And even when it goes to 60 the following year, that's still a lot of depreciation. I'm old enough, and I was doing cost segregation studies in the 90s. Okay, so that kind of idea, look, I've been doing this for 30 years. We were doing cost seg studies in the 90s when they were still relatively new and nobody had heard of them. And people were thrilled just to reclassify things to 5 years and get the regular 5-year depreciation instead of the 27.5-year depreciation, right? So there was no such thing as bonus depreciation. But so just even when you get to 2027, and let's say there's no bonus depreciation, cost segregation studies are still valuable. It's just that the depreciation, instead of getting it all in year one, the 5-year depreciation gets spread pretty equally over 5 years. That's not the worst deal in the world. That's still that's still enough depreciation to wipe out any
Yeah.
income and still maintain the tax-free passive cash flow for your investors.
Interesting. So, and a lot of syndicators' investment horizons are 3 to 5 years. So it pretty much overlays. It's almost like a non-impact when it goes away if your horizon is that long or
Yeah,
longer.
what it really, think about this, who it really affects is the operating partners, the GPs, who qualify as real estate professionals and are active in the investment. It does reduce the amount of bonus depreciation that they're going to be able to use to wipe out ordinary income or capital gains from other deals. So it definitely affects them. It doesn't really affect the limited non-active partners because they're still getting plenty of depreciation to basically create a negative K1 and give them passive tax-free
Mm.
cash flow, which is what they're looking for.
Yeah, and ultimately, if at least this is the way we look at it, is we put the investors first. It's like what most benefits them, and so that continue the cost segregation study and the depreciation can still be a component of your marketing campaign for raising capital. It's just like you had mentioned, doesn't quite benefit the GPs quite as much. So yeah, something to keep in
Right.
mind.
It's still going to be, yeah, it's still going to be an important part of why people invest in syndications, because ultimately they're looking for, a stream of income that they don't have to pay taxes on. Right.
Right.
And that'll still be a part of that, even when bonus depreciation is gone. And one point I also want to make, right, is I see a lot of syndicators. So it's one thing to market tax-free cash flow using depreciation to your investors. It's a whole nother thing to do what I see a lot of syndicators out there doing, which is literally giving tax advice
Hmm.
to their investors, right? I've got people who will send me, no, seriously, I have people who literally will send me, hey, my investor Joe is trying to input his K1 into TurboTax. What should I tell him? Tell him,
Go
right?
talk to them. Yeah.
Tell him he needs a CPA. That's all you should tell him, right?
Right.
Don't try to be like, okay, put this on line 9 and what you have no idea what Joe's tax situation is, right?
Hmm.
So don't try to be Joe's accountant. So there's a reason why they call them sophisticated and or accredited investors, right? If you're a sophisticated investor, you should be sophisticated enough to have an
Yeah.
accountant,
You
right?
tell that dude
And
to
so
go ahead.
you as the operator should not be telling people what line to put what number on in their TurboTax,
That's just
right?
asking for ass
You're
whooping.
gonna get sued
Yeah.
when somebody screws it up, right? When they get a notice from the IRS because they screwed up their TurboTax, they're gonna call Brandon and say, "Well, Brandon told me to put it on line 9," right? Don't
Yeah.
do that.
If someone's asking you that question, you almost have to like wonder, like, is this person sophisticated enough to be part of my deal? If they're asking me tax questions like that. So just
Well,
something
look,
internally.
you want to when people so yes, so the tax questions, you're always going to get the tax questions, right? But you then have to say, look, you need to talk, here's the general answer, but that's what it is. It's a general answer, right? So yes, the bonus depreciation is going to wipe out your distribution and you won't have to pay tax. That's the general answer. How it literally affects your individual tax return, Mr. Investor, you need to discuss that with your CPA.
Right. So that's the line
Because
you come across.
everybody's situation is different and there's no one size fits all, right? Because I'll just give you an example. Let's say this particular investor has a mature portfolio of other rental properties and he has a lot of net rental income that he's showing. Well, that's a great opportunity to invest in a syndication and use the bonus depreciation to wipe out that net rental income. So that would be the general advice.
Right.
How to actually implement that in your TurboTax? Ask your accountant. Get a CPA, right? There's no syndicator that should literally be helping people prepare their return, and that's where I see people getting, almost, they're basically, um, acting as a tax professional, right? So that whole disclaimer that every syndicator does when they do presentations, that whole, this is not tax advice. I'm not a CPA. Well, if you start literally helping people prepare their returns, well, now you're acting as if you're their CPA, right? So when they get in trouble, who do you think they're going to come after?
Yeah, probably don't want to be that guy. So.
Right. Don't be that guy.
Or gal,
Work out, right? Yeah. Don't be that person.
Yeah. One of the things too that we help, I talk about, I don't give specific tax advice, but I recommend that people look into your overfunded whole life insurance policy, also known as IBC, Infinite Banking Concept, solo Ks, solo 401ks, and self-directed IRAs. I typically give people some general direction to that. Be like, hey, talk to your person about this. Maybe you can get this set up and have an even more tax advantaged way to get into a deal. But I mean, I know where the line is. Like, hey, I'm not going to show you how to fill this out on your tax return, or I'm not going to set up a self-directed IRA for you. Talk to these people.
Well, exactly right. And there's nothing wrong with, so think about this. You're a wealthy individual. You're investing in syndications. You absolutely should have a team of professionals around you. So you, as the operator, if you want to say, look, I'm happy to talk to your accountant about this. I'm happy to talk to your financial advisor. I'm happy to talk to your insurance agent, right? I recommend that you put a team of these professionals together that know what they're doing, right? And I'll give you the general concept, and then you have to hire the professionals to help you implement that. That's an awesome strategy, right? You just don't want to be, a combination of the operator and their accountant, financial advisor, and insurance agent, right? You want to help them put that team together, because ultimately it's all about producing the best result for the investor. And if having that team together does that, then that's probably the best result you can ask for.
Yeah, and in my experience, the people who set up those types of structures they tend to be very eager to share their knowledge with people and educate. And so part of a unique value add for you is, as a syndicator, is that you can have this team of people together already, and you can just plug them in. Be like, hey, I've got a guy or I've got a gal, who can point you in the right direction and help you get set up, but don't try to do it yourself. It just adds value. Like, hey, this guy is connected. He knows a lot of people, and it helps. Increase the perceived value you bring as a syndicator. You're not just taking their money. You're trying to help them get the best benefits.
There's nothing. That's an exceptional strategy. Yeah. Ultimately, you're producing like I said, ultimately you're producing the best result for your investor by doing that, and you're hooking them into a network of people that you've already pre-vetted, that are doing great things for other clients of yours, other investors. So yeah, exceptional strategy.
And you've developed some resources, like checklists and things like that for syndicators, right?
Yeah, so that I would offer that to anybody who wants to get those checklists. We have what we call the proactive syndication setup checklists for new syndications, and it goes over all the things that we're talking about: how to do the bookkeeping for the outside account, how to get what you need to have on all of your investor lists, all the documents you need to give your accountant to get started, right? So it has a complete document request list that somebody like myself would need to actually prepare the syndication, a complete list of, the closing statement, the P&Ls, all of that all that stuff, the
Right.
cost segregation study, right? So even if you decide, hey, I like this guy Ted Lanzaro, well, let's use him to
Right.
do it. Great. If you have another account that you want to work with, you still get the checklists
Right.
and use checklists to put together the information for whatever CPA you want to use.
Yeah, and so I'll include a link to that in the description with this video for people that are interested.
Great.
Um,
Are you going to actually include you're going to put
yeah,
listen?
I'll put a link to that so people can
Awesome.
download it.
Yeah.
So that's a great resource. We've already implemented full disclosure. I'm working with Ted on on a deal, and whenever I find a good resource, I always want to share it with people. And so definitely connect with Ted. Are there any other tax like patterns that you see with syndicators that maybe they're not best practices that they can improve upon, other than things we've gone over already?
I think that pretty much covers it. I mean, I just think that the more organized you can be, the better off you're going to be, right? Because as an operator, I see a lot of operators sort of operating kind of on the fly,
I'm
right? And
figure it
not
out as
as
I go.
organized
Yeah.
as they could be, right? I think ultimately, the larger you grow, the more chance that you're going to miss something. And I actually had one of my clients come back to me at one point with one of their deals and say, "Oh my God, we forgot Joe Smith is an investor in this deal. He's not even on the list,
Uh-oh.
and on the investor list." And we had to amend that return, right? I can't think of a bigger investor relations nightmare than having to send out amended K1s to your investors with an explanation that we forgot one of you,
Right.
right?
Yeah.
That just says
See,
we're
incompetent.
not organized.
Yeah.
We're not that competent, right? You're giving us hundreds of thousands of dollars and we can't keep track of you all, right? So yes, be as organized as possible. And that there should always be, on any team, there should always be one person who's literally, the hyper organized one, right?
Right.
And put that person in charge of keeping everything straight.
Yeah, I would say maybe the investment relations manager, or maybe even the underwriter, because underwriters tend to be like the down to the detail, like every little thing. So
Yeah. Yeah. The most detail oriented person on your team should be the person in charge of that, because look, the business, it takes all kinds, and a lot of very successful syndicators are, kind of big picture visionary kind of thinkers. They're concentrated on, making the deal, and then, they need,
yeah.
another partner who's like the
Yeah.
micromanager.
Well, and think about from the investor's point of view, they get your K1 first, and then they start looking at all the other deals that are in the other syndicators. They're like, "Where's my K1?" You know what I mean? So it kind of puts you at the forefront of their mind. Like, holy crap, they have their stuff together. So I think that'd be a great addition to their business, is to just get that done early.
Yeah, I think you're creating another aspect of great investor relations management by getting your K1s out. It just shows a level
Yeah.
of commitment to the investor
Yeah.
that, frankly, a lot of people don't have.
Right. And then I know you typically don't take on personal tax returns. You have a team member that takes over that kind of thing. What's an ideal client for you for that side of things?
So I typically concentrate, my work is typically business returns, including the syndication returns, and the high level strategic tax planning. That's my job within my firm. Okay. we definitely do personal income tax returns
Right.
for literally hundreds of people. I have a tax attorney, CPA partner. His name is Bob Carroll, and him and his team do all of the personal returns for the firm. With my input, with here's the K1s that I just produced for these people. Here's the tax strategy or planning that I put in place, right? But he's in charge of actually, getting the timely personal returns out, making sure everybody, has the right dollar amounts paid in for extension or
Right.
whatever, so it's just a division of labor within my firm. But for a lot
Right.
of firms, all firms do things differently. In my firm, I do most of the business and strategy work. He does most of the personal return
Right.
implementation.
So if a syndicator has a limited partner who's like, I need a new CPA, they can send them to you. And you take care of them.
Right. Yeah. Yeah. They can absolutely. And what I would do, the first step that I would do is I would like review their situation,
Mhm.
right, and see what strategies we can put in place for them before the end of the year,
Right.
right? And that's why I do a lot of passive investor education for operators, right? And as a result, I get a lot of phone calls from passive investors. So the first thing we do, and I'm always happy to answer their questions about how investing in this syndication will affect their tax return, right? And so that's the preliminary stuff. Then I'll turn it over to Bob and his team to actually, get the return done. But the strategy part, I do most of the strategy part for all of my operators and limited partners.
Awesome. And then I guess for 506Cs, do you like do letters like this guy's accredited or this person's accredited?
Yeah, yeah, I'll do accreditation letters for people. Look, they have to show me that they actually qualify,
Right.
right? So they have to, I'm going to ask them for documents. I just don't sign form letters
Right,
and here you
exactly.
go.
Yeah. You actually
Not
verify. That's the whole point
right.
of
We
it.
do. Yeah, we actually verify. We actually verify the
Uh,
information. Yes.
Cool. Awesome.
So
Well, anything else you want to add before we wrap this up?
no, just look, I'm always happy to be a resource for whoever I can help. Let's leave it at that.
Awesome. Well, I appreciate your time today, and I hope all the viewers got some value out of this video. And we'll see you at the next one. Take care, guys. Bye bye now.
All right. Thanks, Brandon.